the monetary policy rate as set by the central bank governor or the central bank monetary policy committee. Now, that rate effectively becomes our cost of funds plus a little premium. Okay, if we're borrowing at say 11, if the government borrows at 11%, and say we borrow at 11.25%, now NMRC might add another 25 basis points, as in 0.25% as its own, cost. That makes 11.5. And if I can get, the banks to say, okay, we will add maybe 1 or 1.5%. Effectively, what you're saying is now the individual is borrowing at a cost of about 2% or 2.5% above where the government borrows. That to me is also a phenomenal achievement, because under normal circumstances, if you think about it, the government, right, is the best credit risk in the system. So they borrow the cheapest. Now, if you're now borrowing at just that little spread above the government, I think that's also very good. Now, in other words, bringing the individual from borrowing from a rate of about, 18, 20, down to at least early teens. And what I can certainly promise, is that as the government interest rate goes down, so will the cost to the mortgage, the borrower also go down. So if, for instance, we have a different policy going forward in terms of interest rate policy, and interest rates were to go down over the next, say, 24 months, right, you can expect that mortgage rates would obviously probably end up in single digits.
Another thing that is still yet uncertain is if you have gotten full operation from the central bank.
No, there's one more thing we need to do, which is to raise the capital. And there are a few little glitches that we're sorting out, but I don't think that's an issue. We would have that. We'll get that. I mean, everybody wants this to work. So, we look forward to closing the capital raising, with the investors, and all that's already sorted. It's just sorting out some of the documentation with CAC, SEC, etc. And once that's done, then we'll raise the capital. But having said that, we began the process of beginning to operationalize the institution.
By the second quarter?
Yeah, the idea is that over the next 6 months, it can at least become an institution that becomes...
Now, the thing about this is that, is it going to sort out or help state governments in any way? Because we have huge land ownership problems, challenges over there in so many states. So are you really incorporating them into this initiative?
Oh, yeah, of course. I mean, we even have pilot states that we've, chosen.
How many?
About 14 of them. Now, of course, what's important is not the number of states, in my mind. It's really where you make the biggest impact. Now, in terms of the collaboration with states, it's really more to do with the titling issue. That's where we see the major glitch with states. So when you sell your house to me, how long does it take for ownership to transfer from you to me? In some places, it can take up to 5 years. Right now, a housing market can't work that way. So some of the things that we want to work with the state, and we even have under the program, you have people like the World Bank, you've got people like GEM, DFID, etc., who are also willing to work with the states, providing them technical assistance, funding, to find ways of re-engineering their titling system to make it simple. In fact, some of the ideas we have is the possibility of even having public-private partnerships for land titling, where you have a private company actually working on behalf of the state under a partnership, you see? So today you have a system where you pay all the charges, right, to the state, and then it can take forever before you get your so-called, what's called a certificate of occupancy. This, for instance, if you reverse it for the private company, it will be a case of what? Payment versus delivery, which makes the process hopefully a lot more efficient. You see, so these are some of the areas we're trying to also change, which doesn't, in a way, it makes the system much more efficient. It brings more revenues to the state, and it makes the residents of the states certainly much more happy.
Okay, before we just wrap up, you'll be floating bonds in the capital market, later in the year. Let's talk about that, really. You already had soft loan, which you said is in...
We're capitalizing that, so that's capital.
Exactly. So let's talk about this bond you'll be floating later in the year, really.
Well, the bonds are there basically as the major source of funding. So let me give an example. And I'd even use it to explain how this works. Ex-mortgage bank underwrites a mortgage, for say $5 million. Now, it may initially fund that mortgage with 6 months duration money because they can easily get that from a warehouse line or something like that. Now, once that mortgage is done, the person who is actually borrowing the funds to buy the house gets his $5 million, buys his house, the developer gets paid, and that's cool. Now, of course, the loan to that person is, say, 20 years. The source of funds is 6 months. So you can see where the asset-liability mismatch is, right? Because what it means is that Mr. Mortgage Bank has to pay that money back in 6 months. Meanwhile, the person he's lent the money to has 20 years to repay it. All right? So what does Mr. Mortgage do? He now brings that mortgage and brings it to NMRC and says, can you refinance this for me? You see? Then NMRC then gives it, say for instance, a 20-year loan. Now that 20-year loan from NMRC to the mortgage bank now matches the loan to the buyer. So as the buyer is paying back, right, the mortgage, then the mortgage bank is also paying back NMRC. NMRC is also paying back the bondholders. That's how it works.
So
and you can see how sustainable that would work then.
Yeah.
Exactly. You see. So and I use that to answer the question of the bonds because it just tells you why it's important that the company can now raise bonds. So it raises monies, uses to lend to the banks use it to lend to the individual. They pay, we pay, we pay.
All right, Mr. Sonny Ayere, it sounds really feasible. It sounds interesting of course, and we actually look forward to seeing something very viable, in the coming months. Thank you for joining us on Deep.
Thank you very much.
Thank you.
Cheers.
Well, thank you for your mails. I have this one from Ijoma Linda Ono, and she wants the health minister to explain why microbiologists were excluded in the hospitals while they play key roles in the laboratories. Well, this one is from Alao Moses, which says, why is it that everything that doctors have, health workers get interested in, yet they lazily avoid the strict requirements of admission into medical school? Well, thank you, Moses, and everyone else that have written in. Please do send your comments and views to the address and Twitter handle on your screen. Thank you for watching this week. I'm Gloria Umezuke. See you again.